All right. Good evening, guys. Welcome back to today's class. All right. Again, I'm happy to see you guys in such a wonderful class. Just a minute. Let me just connect to your chat box. I'm connecting to
Just a minute. Let me just
connect to your chat box. Yeah. Now I connected. All right. Okay, we are ready to go now. Yes, done. So welcome back again. So now again we are going to see only basics. As I told you last class itself, another 1 or 2 classes we'll be seeing this. Then we'll be going ahead with your maybe your few topics in your syllabus, right? So last week we just seen about the traditional method of accounting. So how that would be and how to remember those things. And you guys asked a few terms like accrued and outstanding and all those things. So we did few examples also. Now there is another approach called accounting equation approach. Okay, so how we say in mathematics, like LHS, RHS, like in in your geometrical equation. So we are in algebra, we will write the same way in accounts also. We have one equation that is called assets is equal to liabilities plus equity. Ma'am, how is it? What is it? All those things I'll tell you. Now, forget about all these, technical words. Okay. Now, understand equity. The meaning of equity means owner's capital, owner's fund. Okay. Very simple language, I'll tell you. Owner's fund. Okay. How much the owner has invested from his own pocket. That is called equity. Capital. We call that as what? Capital, and that is called equity. Okay. So that's why your share capital and all will be called as equity. Capital means what? What I have invested from my pocket. In my business, something I have invested, that is called equity. That is called capital. You are getting it? Liability means what? What I borrowed and invested in my business. What I borrowed and invested in my business, okay, and used that borrowings for my business. You are getting it? So that is called liability. Now, I have a house, okay? I am purchasing a house. Forget about all this. Now listen to the example. I wanted to buy a house now. I finalized a flat and the flat ka price is say 60 lakhs. They are saying 60 lakhs. Now I am just checking my savings account. I would have saved something, no? Obviously. I would have saved, I was earning for last 5 years, 10 years down the line. So I saved some amount. So what I did, I'm checking my savings. I have around 15 lakhs or 20 lakhs in my hand. I just took 20 lakhs. It was there in my savings. I mean, maybe in form of bank accounts, maybe in form of jewelry, maybe in form of shares or whatever it is. So I sold, I realized I kept 20 lakhs. Now, baki 40 lakhs I need. So what I'm doing, I am just going and asking the bank. Home loan. I'm going for home loan, obviously. So I'm going, maybe I'll go to SBI. So I'm asking SBI, could you please give me the housing loan? I have submitted all the documents. Now bank processed everything, and how much you are going to invest from your pocket, they will ask. That is called down payment, they will say. Correct. So I said 20 lakhs I'm going to invest. So I need 40 lakhs. So bank said, quite, it's a good amount. So, okay, fine. We will be giving you, no problem. So 40 lakhs they released. Okay. So now this is my own fund. And this is my borrowed fund. Okay. And put together 60 lakhs I gave to the landlord or owner, that house, that seller, and I purchased the house. Okay. Now this is mine. Correct? Now this is mine. Now house is what? Your property. It will be in your name. Your property. It is your asset. Correct. So now tell me, this is my property. This is 60 lakh. How this has been financed? How this has been purchased? Borrowed is 40, own is 20. So now, is it tallied or not? So this property is nothing but my asset. This borrowed fund is nothing but my liability. This own fund is nothing but my equity. Guys, this is simple logic. Our parents will say as a, in colloquial language, if it is there in the purse, it will come. If it is there in the brain, it will come automatic, which means whatever you have, that only will come out. Correct? No, that only will be there. Right? The same way, that asset what I am owning, the property is what I am owning right now, that would be either financed, how I would have purchased it. Either I would have saved money I would have purchased, which will be my own fund, or I would have borrowed and I would have purchased it. There are no other way. No, nobody will give free of cost. No, if somebody is giving free of cost, so that is a different scenario. You are getting it free of cost, so it is treated as donation or something, and it is a different scenario. You are getting it. So whenever I am purchasing an asset, it will be all my assets, whatever it is, all my assets. There are only two ways. Either it will be purchased via my own fund or through the borrowings. You are getting it. So now what is equation you are arriving? So if I sum up all my assets, then definitely it will tell me how much I would have invested and how much I would have borrowed. Correct? No? Correct. So that is the reason the equation comes like this. Assets is equal to liabilities plus equity. Hi Ravi. Hypothecation. What is meant by hypothecation? You wanted to know what is meant by hypothecation, or what is it? Why you mentioned that word, I'm not sure, Ravi. Hypothecation. If you want to know about hypothecation, I'll tell you, but I don't know why you said hypothecation. All right, come back. Now, if you want, you just type, let me see there. All right, now coming back. So you're getting the point. That is the why the equation was like this. Assets is equal to liabilities plus equity. It is termed as a case of car loan. Yeah. Okay, so you mean to say that liability for hypothecation, all right, whether it is a hypothecation or installment purchase or whatever the term you use, at last it is my liability. It is my when a part is paid by the bank and part by me. Okay, so for that liability, okay, I am not using that word. I'm just saying simple terms like that is my liability. Correct. I have paid and bank is funding my house. That's it. So I have to repay to the bank. So that is my liability. That is my loan. That is my liability. That is my borrowings. Correct. So 20 lakh is from my hand and my borrowing is 40. So put together my house came. So which means that borrowing is nothing but liability. That borrowing can be in any terms, guys. It can be debentures, it can be secured loans, it can be unsecured loans, it can be installments, it can be whatever hypothecation, whatever it is. Those terminologies might change. But the essence is only one. It is my liability. I am supposed to pay in the future. I am supposed to pay in the future. You are getting it? It is an outflow for me. I am supposed to pay. So liabilities, then my own fund. My own fund is nothing but equity. My own fund is nothing but what? Equity. So in your accountancy, not accountancy, in any financial statement you take, okay, you take any financial statements are public documents. You can get it in your MCA also. Even few companies are posting their financial statements in their websites. You can download from there. You take whatever it is. You take whichever company you want. This is the equation. Your assets will be equivalent to your liabilities and equity. You are getting it? Summation of liability plus equity will be your assets. Ma'am, so the scenario is this only. So the concept here is whatever you own, it must be funded by either by yourself or by the borrowings. That's it. As simple as that. Why I am telling you here is when you go to ratio analysis, you will be having a formula for net worth. You will be having a formula for net worth. At that time, I'll revisit this formula. You will understand that. You are getting it? Net worth there is there. And when you are preparing there is one chapter called preparation of financial statements. Okay, preparation of financial statements or preparation of final accounts. There also this equation will help you. So remember, assets is equal to liabilities plus equity. You can do left and right, then you can find any one thing, XYZ only. So asset minus equity is equal to liability. Asset minus liability is equal to equity. So they will give two figures and they'll ask you one missing figure. So like that also questions will come. You're getting it? So this is accounting equation approach. Now, entire accounting will be done in this fashion. In this fashion, in the sense, they will say, okay, cash is coming in, cash is going out. Okay, my assets is reducing, my asset is increasing. Okay, so what is happening to the liability side? What is happening to the equity side? They will see. But in India, we are following traditional approach. And till now also, we are going through journal entries. We are passing ledger statements. We are preparing trial balance. We are preparing final accounts. Only that way we are doing it. This asset is equal to liability plus equity. We are using it only for the analytical purposes. You are getting it? So in your syllabus also, nothing much is there on this particular equation method. Mostly it will be for your ratio analysis and then preparation of final accounts. Only in those two chapters, that to very few formulas, this will be applied. You are getting it? Now, there are certain terminologies you should understand. Why? Because we will use the word like credit sales, credit purchases. So what is meant by that? And we will say that capital, return on capital, return on investment, capital employed. So we'll use the word ratio analysis. We'll use the word capital employed. So what is meant by capital employed? So there will be a question for that. You are getting it? So those things only, these are all very basic terms we are going to see today. So transaction means it is nothing but any activity, an event, okay, an event happening there. That's it in my business, which has a financial impact, That's it. That is called a transaction. Anything for that matter, guys, that is a transaction. An event has occurred and that has a financial impact. So that is a transaction. I purchased goods. Transaction. It's a full transaction. I sold goods. It is a transaction. You are getting it? I paid salaries to my employees. It's a transaction because salaries, financial impact. Yes. I took the services of a professional. Transaction because I am supposed to pay him. I borrowed money. Transaction. There is an impact, financial impact. So any event which has a financial impact, then that will be treated as a transaction. You are getting it? And here we have two types, cash and credit. So here only it comes like an accrued concept. You are getting it? Why, ma'am? What is it? Cash means immediate. Just pay the paisa, take the goods, go, done. Credit means what? We will be doing, no, in Amazon, ECEMI. Correct, no, we will buy the goods, but we will not pay immediately. We will be paying month on month. So Amazon, what they will do, that seller, what he will account in his books, okay, I sold one iPhone, 75,000, and so iPhone you will not get in Amazon. Maybe, you can put that, which one, Samsung or whatever it is. So you will put that 75,000, that phone. That buyer has bought it in EMI. So he bought it in, say, 10 months. So each month 7,500 he is supposed to pay. What that seller will do, every month he will record, sale 7,500, sale 7,500, sale 7,500. Does it make any sense? No. For me, the sale has happened, but you didn't pay me. So it is called credit. It is called credit. So in the transaction, one party didn't perform their action. Which action? Payment action. Paisa. They didn't settle the transaction. They are going to settle it in the future date. They are going to settle it in the future date. That is called credit. There can be credit sales. There can be credit purchase. When it comes to credit purchase, I am a grocery shop owner. I am going to the market, to the wholesaler. So I'm going and purchasing it from the wholesaler, say 100 packets of biscuits, 200 packets of shampoos, all those things. Now I will tell him, Baba, share me the bill. Now he is giving a bill of, say, 1 lakh rupee. Now I'll say, how many days credit period? He will say 30 days. So what does it mean? Within that 30 days, I need to make that 1 lakh, which means he has given me a time to settle that transaction. So that 30 days in the future, I will be making the payment. You're getting it? So that is a credit purchase. Right now, I didn't pay anything to him. I took the product, I came to my shop, I started selling it. And I have 30 days time in my hand to pay back. So that is called credit purchase. The same way I am doing sales. Now my customer is saying, can you give me a credit period? I will pay you in 2 installments. I will pay you in 30 days time. Yes, right now I sold the goods, but I didn't receive paisa. Rather, I will write in my books saying that Mr. X has taken the goods from me. I have sold the goods to Mr. X for rupees 10,000. X will pay in 30 days time. I have to record, no. Correct, no. So this transaction is called credit. You are getting it? Now account, this is nothing but whatever the transaction is happening, you need to give some name, right? Correct, no. You have to give some name. So that is nothing but account. That's it. Every event has some impact, I said. So how do you do? Suppose I paid salaries. Okay, how do you record it? What, you will write an essay? I paid salaries to X, Y, Z, W. Will you write? No. I will put, okay, let me open an account called salary. One name. Done. Salaries, 2 lakh rupees. That's it. Done. So that is an account. You're getting it. So it's how do you measure it? How do you quantify it? How do you park it in your books? What name you are going to give in your books for recording that particular event in your accounting books? That is called account. You're getting it. Next one is capital. All right. Next one is what? Capital. So capital, I already explained in the equation theory itself. It is nothing but capital means what I invested from my pocket in the business. That's called capital. That's called capital. Now, you may have a doubt. Ma'am, share capital is there, no? There, the money is not invested by the owners, no. Say, for example, Infosys you take. Infosys is a listed company. People are giving money to the company, ma'am. How come it is a capital? Why it is called a share capital? Guys, understand. When you are purchasing a share of a company, you are the owner of that company. You are getting it? Yeah? So share means what? Share mean what? There are two instruments, share and debentures. You might study in your Companies Act, but I'll tell you this. Share. Under share, we have different types. Equity, preference. I'm not going into that depth. That is not required in accountancy. That is Companies Act. Okay. Now coming back. Share. Share means what? It's a ownership. It's a ownership. Infosys founder Narayan Murthy, he is coming and saying, Baba, see, I have founded that company. I am the promoter. I am the founder. But my company needs money. My company needs money to run it. Correct. I don't want to borrow funds. I don't want to borrow money. I don't want to borrow, because if I borrow, though, I have to pay. I have to pay back, or I have to pay the interest portion. Because when you give money, when you lend somebody, you'll expect something in return mandatorily. You are getting the point, right? So better what they said is, Baba, I don't want to borrow. You give the money. I will give you ownership. You become the owner of this company. You come and join as a owner of this company. So you give money. So for that I kept a name called, for that I gave a document called share certificate. Share. You are getting it. So which means whoever holds the share certificate, forget about the value of the share, guys. Ma'am, I am having only one share of Infosys, ma'am. Am I a owner? Of course, yes, you are the owner. You are getting it. And if you are holding a share certificate of any company, you are the owner of that company. And that is the reason the money what you have given to the company is treated as share capital, which means owner ka fund. Owner ka fund. Please understand that. It is not a borrowing. It is not a borrowing. So whenever Nika has come up with IPO last year, correct, now? So they said, we want money. You guys come and buy my shares. You guys become the owner of my company and take the shares. You give the money. I will run the company. I will make profits for you. Whatever profits I am getting, I will give a share to you. In name of what? Dividend. Correct, na? That is called dividend. And I will work for you. I will increase your share value so that you can maximize your wealth. Correct, no? You are getting it. So that is called share capital. That is the reason it is called share capital, and it is owner's ka fund. You are getting it. So don't think that when you issue a shares, it is a borrowing. People are giving money. Founders are not giving money, ma'am. So, but why the name is share capital? It is because they are the owners of my company. They have given me money, and I am just their fund manager. I mean, fund manager I should not use. But here I'm just using it locally. I am just managing that money and doing it in a right way. Strategically, I am using that funds and I am earning on their behalf. You're getting it. I am maximizing their wealth. You are getting it. So capital means it is owner ka funds. Share capital means it is again owner's ka fund. Shareholders are the owners of the company, and that is the reason whatever money given by the shareholders as a capital is treated under equity section. You are getting it. Whether it is a share, preference shares or equity shares, doesn't matter. Put together, it will be shown under equities head. You are getting it? Yes. Drawings you don't have, because this is not there for corporate, so you no need to worry about it. Next one is voucher. Again, it is nothing but a document supporting fuel bill, any transaction. If I do that, I need some supporting document, right? You also ask, no, suppose if somebody comes, hey, I spend so much, show me that, how much you send, show me that. You'll ask, no, so that is called voucher. That's it. And invoice and all, I don't think so. For you in this syllabus, it is not required. Invoice and goods is not required. Now, coming back to purchases, if I buy the goods, correct. Now, purchases. If I buy the goods for resale purposes, then that is called purchases and it is an expense. Why are you saying this, ma'am? Purchases, I know. Why are you saying this? Okay. If you know, just tell me the difference now. Okay. I am a, I'll give a simple. I am a grocery shop owner. Okay. I am a grocery shop owner. I purchased 20 bags of rice. Okay. 20 bags of rice. I purchased three computers. I purchased three computers for billing purposes. Yes, Ravi, I'll give you that. Just a minute. Let me finish this and I'll give you. All right. Now, coming back. So, I am a grocery shop owner. I purchased 20 bags of rice and I purchased three computers for billing purpose. Now, tell me which one is an expense here or purchases here. What is the difference between these two? Come on, guys. Who are all there? Come on. I'm looking at your chat box. Come on. Nobody? Sad. You can give it a try, no? No? Alright, I'll tell you. I am a grocery shop owner, I said. Rice is a purchase. Yes, Ravi, good. Yes, rice is a purchase for me. It is an expense. Then computer also you purchased. No, that is not an expense. Huh? You remember last class, I told the difference between the gold and the money you spent for your trip. Both are different. You remember that? Gold is a investment. Gold is a saving. Gold is your asset. Yeah? Whereas spent for the trip is my expense. Correct, na? I told the same example last week. Same thing here. I purchased 20 bags of rice, which I'm going to resell it, and this is my expense. Whether that is sold or not doesn't matter. That is my expense because that is my business activity. That is my everyday activity, recurring activity. Correct? No. 3 computers I purchased. For what purpose? Billing purpose. So now tell me, these 3 computers are what? Is it my expense? No. It is my asset. It is my asset. I will use these computers not only in the current period. I will use it for another 5 years, another 6 years. So it's going to give me a benefit, economic benefit, okay, over a period of time. It's not going to end within that accounting period. So it is an asset to me. You are getting it. That is the difference between purchases and an asset. Purchases is a revenue expense. You remember this word I used last week. Very good. Yes. So purchases is a revenue expense, whereas computer is a capital expense, which means it is an asset. Which means it is an asset. I will be capitalizing these 3 computers, and in my balance sheet, these 3 computers will be shown as an asset in my books. That's it. So purchases means in my business activity, every day, normal course of my business, I will purchase those items with the intention of selling it. With an intention of selling it. That is called purchases. Purchase return, it is a ulta. You know that. You do know. From Intra you will buy. You don't like to, you will return. Correct, no? That is purchase and purchase return, no? You are getting it. Same way, you purchase from Amazon. If you don't like the product, or if the product is not good, or it is not up to the standard or quality, whatever it is, you will say, I wanted to return it. You are doing, no? That is nothing but purchase return. So you will be sending it back to your suppliers, sellers. That is called purchase return. Sales. Again, sales is a revenue item. whenever I am selling my goods, whenever I am selling my services, you are getting it, in my day-to-day activity. I'll change the example now. I sold 20 kgs rice bags. Okay, I am grocery shop owner. Same thing. I sold 20 kg rice bag. I sold I sold the delivery bike. I have the delivery bike or delivery truck I was having. I sold that. Now here, which one is your sales here? Both of them are sales only. Correct? No, I sold. I sold a rice bag. I sold a delivery truck which I was using it for delivery. I sold. I may purchase it new. Now, which one is a sales here? Which one is a sales here? Which one is a sales here? Hey, come on guys, make it fast, no? Rice is a sale again. Rice, yes. Ravi and Abhi, good. Yes, because I am a grocery shop owner. For me, selling of rice, selling of those, shampoo, biscuit, vegetable, all those things are what? All those things are what? Everyday activity, normal course of my business. But the truck, selling the truck is not my normal course of every day I will sell a truck. I am a grocery shop owner. Every day if I sell a truck, I am not a grocery shop owner. I am a truck dealer. Correct? No? I am a truck dealer. So that is not my everyday sales. That is not my ordinary course of business. Then what is it, ma'am? It is a disposal of asset. This is called what? Disposal of asset. It is not sale. I hope you are getting the difference. So this is a capital item and this is a revenue item. You are getting it? Yeah, this is a revenue item and that is a capital item. Please remember that. Yeah, so sales, I hope you understood the meaning of sale. Sale return is whenever our buyer, now somebody X purchased 20 kgs, he said your rice is full of bugs, you please take it, I don't want. Now that is a sales return. He came and he gave back. That is a sales return to me. That's it. Understood? Now coming back, stock. Now, what is meant by stock? This one is very important. This particular stock. Why? Because you have one chapter called AS2. One chapter called what? AS2. Accounting Standard 2. Inventory. Inventory. That standard itself is for inventory. You are getting it? What does it mean? Inventory, we have three types: raw material, work in progress, and finished goods. Here they are talking about finished goods. So you hold on to this inventory as of now. When I go to AS2, when I'm taking that, at that time you can study, because that will give you a clear picture rather than common understanding. All right. Income though, understand income, whatever revenue I am generating from my normal course of business activity, then that is called my income. Apart from that, if any income I have generated from my asset by letting it out, rental income, dividend income, interest income, commission, all those things will be treated as income. Expense, all other expense, salaries, whatever I paid to do my business, to run my business, to run my operational activity, that is called expense. You're getting it? So for advertisement, salaries, promotional expenses, boarding and lodging, traveling expenses, everything will be treated as expenses. Okay, no need to remember. All AS, right? No, you have, I think, 6 AS, I believe. AS2, AS9, AS10, AS13, AS11. You have 11. Forex you have, correct. AS11, AS13, and then I think that's it, I guess. AS13 is the last. That was a standard. Only 5 standards you have, not all standards. Totally you have 32. I mean, overall I'm saying. But you guys in your syllabus, I'm sorry, in your syllabus you are having only 5 or 6, I believe. AS2. Yeah, cash flow separately you will be reading. So AS3, it won't be counted under accounting standard. So AS2, AS9, AS10, AS11, AS13. That's it. I think AS13, investment was the last, I guess. So 5 standards you have to remember. And don't worry, it is easy. Okay, except AS10, rest everything is very easy. Nothing to worry about it. Okay, now coming by AS10 also easy, but it is quite lengthy. That is the only stuff. All right, hope you understand this. And there was one question asked, difference between invoice and the voucher. See, invoice here, what they will do is, whenever it, I mean like voucher though, when you are recording a transaction, suppose say for example, I am recording, I have paid salaries, I have paid, say I have purchased some stationaries. Now, for that, I need a supporting document, right? That is called voucher. That supporting document is called voucher. Vouch means what, guys? I vouch for him. You can believe. Which means what? You are giving, you are saying he is good. Believe him. I can vouch. I can vouch means what? I am the proof. That's what I'm saying. You are getting no. So it's nothing but proof. Invoice is one of the proofs. One of the proofs. You can submit the invoice as a proof. You are getting it. So voucher is nothing but proof of that event, proof of that activity that has taken place. I paid salaries. Where is the proof? That is called voucher. I purchased stationaries. Where is the proof? Purchase ka bill, that stationery ka invoice, stationery ka bill, that is called voucher. That I'm submitting, no, that document is called voucher. You are getting it? Invoice is nothing but any seller, he will raise a document which says that to so and so guy, I have sold so much of you, whatever the description. He purchased. In your Amazon, it is coming, no? You purchase this phone, this model, this is the price, GST number, vendor name, buyer name. That is an invoice. You're getting it? So whenever a document prepared by the seller to the buyer, reflecting all the information about the transaction, that is called invoice. Invoice is one of the proofs that will be treated as a voucher. That's it. Hope you understand the difference. Yes? All right. Now coming back, assets and liability. This is what I was talking from beginning, which is more important. Asset and liability. Asset means what the organization owns and which has some economic benefit and which will be for more than an accounting period, which will give me that economic benefit for more than an accounting period. It's not going to end within the current year. It will be giving, in the near future, it will be giving. So that is called asset. You're getting it? So asset means what? What I own. So as an individual, I'll tell you, for you, I can say your bike is an asset. Your mobile phone is an asset. Your jewelry is an asset. Your house is an asset. Your bank balance is an asset. You're getting it? Because these are all you own. You own it. Your knowledge is an asset. Intellectual property. You're getting it? IP. Technically we call them as IP, and more technically it is called intangible. You're getting it? Intangible. So your knowledge is your asset. I am not giving gyan and all. Knowledge is an asset. No, technically speaking, it is an asset. In books also it will be capitalized, don't worry. It is called technical know-how. It is called copyright, patent. You're getting it? Patent. I hope you would have heard the word patent. I have invented it. I have found it. That is my brainchild. You're getting it? So that is my asset. Yeah. So all those things. So whatever I own, that is my asset. So for an organization, if you ask, building, office, furnitures, the chair what we are sitting, the table what we are using in the office, the laptops what they give to their employees, the fixtures, the lights, you are getting it, everything, that is their asset because that organization owns it. मैम पैरेललोग्राम को स्क्वायर प्रूव कर दो. What is parallelogram for square? I am not well versed in Hindi. I am sorry for that. I don't know. So it would be better if you can put it in English. I can understand. And parallelogram, it is not related to accountancy, I believe. I think you are asking some mathematic question, I guess. I am not good in math, and I don't know what is parallelogram you're asking for. This is the first time. Is it there in accountancy syllabus? I don't think so. All right, I am not sure. This is a mathematical question. Maybe I'll just post it to your math. Understood. Because if I don't know anything, though, that would be math only. Because I am not that great in math. I am good in commerce, accounts law, since I am a chartered accountant. Yeah. All right. All right. Now coming back. So coming back here. So I'll pass on this question to your, math faculty. No is ninth standard question. Number is, I don't know, Baba. All right. Coming back. All right. Now, so that is asset. So everything, whether it is tangible, we call that as tangible. Tangible means you can see, you can physically touch, you can, you can touch basically all my properties. Intangible means, like I said, my knowledge, goodwill, my good name. Okay, this brand, brand, that is an asset, Baba. Do you know that apple? That apple is there, no? Bite an apple. That has a value. You will give, no? Even if you put one dabba phone, if you put that apple symbol, you will pay lakh rupees, no? You will believe, no? Correct, no? So that is an asset. Branding, that is an asset. You're getting it. Handbags. Yeah, Louis Vuitton, LV. When you see that, you will be paying 4 lakh rupees for that handbag, no? 5 lakh rupees for that handbag, no? Gucci, you will pay, no? Adidas, Reebok, Nike, that tick mark, everything is an asset there. Brand, that is a brand. So that is an asset. It will generate revenue for me. You are getting it? I build that, it generate revenue for me. All right. Oh, he came to the wrong class. Okay. Okay. Now coming back. Baba, this is Commerce and Account section. This is for SEBI Grade A 2023 exams. All right. Coming back. Liability. Now, what is meant by liability here? What I owe. What I owe. Now, for you, I'll tell you. Your housing loan, your bike loan, your car loan. Correct? No. You borrowed from your friend. Correct. You took advance from your employer. Liability, which means I am supposed to pay them in the near future. I am obligated to pay. I have borrowed. You are getting it? For companies, what could be the terms we can use under liability? Debentures, secured loans, Unsecured. Secured means what, ma'am? Secured means I have given the collateral to the lender. Say bank, in the bank I have given my something as my security, something as a collateral. I am taking loan. So that is called secured. Unsecured is no collateral under, but I will borrow. I mean, based on my credit, they will give. So my credit card, my bank overdraft is my liability. Yeah, my creditors. I mean, my even that is a liability. I'm supposed to pay. I purchased goods on credit. I'm supposed to pay him. That is a liability. You're getting it. Under that, I'll call him as creditor. Accounts payable, because I'm supposed to pay him. Accounts payable. Provisions, all my provisions. Yes, provision means I am making it now because in the future I'm going to pay. So I am provisioning it now itself. I am expecting that in the future I will be incurring so much of expenses. So it is a matter of prudence. It is a matter of prudence. In accountancy, we call that as prudence. Prudence means what? You are very much, you are, what I can say, you are very much vigilant, in the sense I should not be very lethargic. I cannot, just like that, I cannot take expenses like that. I have to cautiously aware what is happening, and next 10 years this much is going to happen, next 5 years or next year I'm supposed to pay so much, I may incur, so I have to provide for it. So it's a matter of prudence. Prudence means very carefully you are doing it. You are very much diligent in doing it. You are getting it. Diligently I will be doing it. Religiously I will be following it. I don't want to, create any havoc in my financial, financial commitments. You are getting it. So we always make provisions. Those are all liability. You are getting it. So asset, liability. Now next one, debtors and creditors. You will be studying this in your ratio analysis. What is meant by debtor? What is meant by creditor? Please understand, debtor or accounts receivable, AR you can say. All right, last class we have seen that. Creditors are accounts payable, you can say. You're getting it. Now what does it mean? When as a business I sold goods to somebody and that somebody is still yet to pay me. So that guy has taken a benefit from me, but he has to pay me yet. That guy is called AR, accounts receivable. He is a debtor. So it is an asset to me because I have to receive from him. It's an asset to me. You're getting it? And AP. Yes, Abhi, current asset. I'll come to that bifurcation, current and non-current. Okay. Once I finish this, I'll come to that. All right. Next, AP is creditor. Creditor means those I have taken as a company, as a business house, I have taken benefit from somebody else. I am supposed to pay him. I didn't pay yet. Then that guy is called AP. Who has given me the benefit? That guy is called creditor. That guy is called AP. And who has taken benefit from me? That guy is called debtor. Now, debtor or AR is my asset, and creditor or AP is my liability. Okay, so that's what I said. So under asset, you have so many line items. Under liability, you have so many line items. You're getting it? And this one, when I go to preparation of final statements, now financial statements, final statements, at that time you will be studying. Like now, I'll tell you an example. For assets, I'll give you the list. It will be first bank, cash in hand, debtors, prepaid, accrued incomes, and then goodwill, fixed assets to furnitures, office equipments, vehicles, buildings, land, and then what else? Computers, laptops, whatever, sab kuch, whatever it is, that will be treated under what? Assets. Under liability, like I said, debentures, loans, secured, unsecured, bank borrowings, creditors, provisions, and then what else you have? That's it, because everything will be clubbed under here. You're getting it? So all these things are liability. Now, there is a major bifurcation. Okay, current and non-current. What does it mean? This bifurcation will be coming for your assets and liabilities. Okay, whatever it is. Ma'am, equities won't be coming under this. So assets and liabilities. All your assets and liabilities are divided into two categories, current and non-current. So what's meant by current and what is meant by non-current? Current means the benefit or the obligation which will happen within that accounting year, which is for a shorter period of time. That is called current. Non-current, which is opposite of that, which means it is for a longer time period. That is called non-current. Ma'am, nothing understandable. Put it in simple. Understand. I have bank balance. Okay. In bank itself, you have so many accounts. You have savings account, you have FD, you have RD. Correct, na? Now understand. I have 5 lakh rupees in my hand. So what I'm doing, 3 lakhs I put it under FD. Yes, Abhi, less than 1 year. Yes. Very good. Correct. So 3 lakhs I put it under FD. FD means fixed deposit. Maturity period is 3 years. And 2 lakhs I opened a savings account. I put it in the, I deposited in the savings account. Now savings account, you can withdraw at any point of time. Correct? No. Today I deposited. Tomorrow if I want, I can withdraw. Correct? Day after tomorrow, yes, anytime. But in FD, I cannot. You are getting it. I have to wait till 3 years. So please understand, FD is a non-current asset, whereas bank balance savings account is a current asset. You are getting it. So basically, technically speaking, they will say less than 6 months the asset or the liability, which will be only for a period of less than 6 months or less than 1 year. I can say, I won't say 6 months also. I will say 1 year, less than a year, that will be treated as current. And the assets and liabilities which are more than for a year, then that is called non-current. Another classic example, your credit card is a liability. You swiped credit card. Yeah, every month you have to pay. Correct? That is a liability. Credit card is a liability. You're obligated to pay. You took a housing loan. Now tell me, housing loan you will pay, immediately. You will pay immediately. Today I took housing loan of 40 lakhs, ma'am. Tomorrow I cleared, ma'am. Ma'am, next 6 months I cleared, ma'am. Then why you are going for housing loan then? You wait for 6 months, you just take that, save that amount, you buy the house. No, that is what I will say. Correct? No. Because 6 months if you are going, that interest, that closure, all those penalty charges, everything will be there. You are getting it. So now what will you do? That will be for 10 years, ma'am. This credit card. Ma'am, I have to pay the next month, ma'am. Correct? No, if I didn't pay, so they will put penalty. So I will pay that. This one, 10 years I have time. That is called current, non-current. Your credit card is a current liability, which I have to pay immediately, which I have to pay in the near future. That is called current liability. Non-current, I have some breathing space. I have some time, which is usually more than a year. I can decide, I can wait, I can pay that little longer. That is called non-current. You are getting it. An asset which will give you which will give you economic benefit only within a year. After that it will close, or after that it won't be there. It is done. Then that such type of asset is called current asset. Whereas that asset will be with you for more than a year. Your building, it can stay with you for 5 years. Your furniture, it can stay with you for 10 years. Your land, it will be there for 50 years also. Non-current. My brand, I created over the year. That is a non-current. You're getting it. My patent, all the time it belongs to me. Non-current. You're getting it because it's a long term. Earlier we used the word long term, but now we are not using the word long term and short term. We are using the word current and non-current. So non-current assets though, or non-current liabilities though, it is usually more than a year period. Current though, it is very near future, it will be giving me the benefit or I will be liable to pay. That is called current. Hope you got the difference, guys. Alright, this is accounting cycle steps. First, the transactions will happen. Then you have to collect all the documentation, that is vouchers for that. You will be passing a journal entry. Then from journal, you will be preparing a statement called ledger. From ledger, consolidation of balances is called trial balance. That is nothing but it gives you a list of accounts and what is there. Total expense during the year, total amount during the year. From there, I will prepare the financial statement. My financial statement means my trading account, P&L account, balance sheet. Nowadays, cash flow statement. You are getting it? So this one we will see maybe sometime later, because you have preparation of final accounts. When I'm doing preparation of final accounts, at that time I'll tell you this. I hope you guys had some insight on this. Hope this class would be useful to you. So I wish you a great day tomorrow and a very good night today. Have a good night today and see you on the next class, guys. Bye bye.